FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is December 10th, 2019. Well, we finally get a real life explanation of why the repo meltdown, what really happened, and you're not going to want to miss this. Hey, also, let's talk about the seasonality of gold and why it could start going up any day now. Let's see what happens. And John Rubino is with us from dollarcollapse.com. Don't forget, send us some emails. Let us know what you think about this repo mess after we so eloquently explain it to you, John. So finally, we have an explanation. You know, my theory was one or more large banks had failed, but then I amended that to say there's other entities that are in the repo market, and they are making use of the good terms, and one of them could have failed. Now we find out something totally different, don't we?
Hey, Kerry. Well, originally everybody thought it was Deutsche Bank, right? Because that's the usual suspect for any kind of under the surface financial crisis. Because everybody assumes Deutsche Bank, with its derivatives book that dwarfs Germany's GDP, is going to blow up at some point. The stock has tanked, and they're trying to merge it with another bank like Commerzbank or somebody, and that hasn't worked so far.
And no one wants
the government's who would? Who would want to try to integrate Deutsche Bank into another bank? That's like a lifetime's worth of nightmare.
Yeah, headache, let's take the Titanic. We know the Titanic's going to fall, but we're going to buy it from the Cunard line or whoever owned it. I think it was Cunard. So we'll just buy the Titanic, and it might hit. It's already sinking. It hit that iceberg, but we want it. It's got collectability interest, right? Yeah.
Well, and it hasn't worked yet for Deutsche Bank. But anyhow, that was what everybody assumed. You know, that conclusion that everybody jumped to when the Fed couldn't tell us why the repo market was blowing up. Everybody just said, "Well, Deutsche Bank is imploding." And, we can't say that, right? So they have to keep it secret. But the Bank for International Settlements looked into this and just came out with a different conclusion, which was that, the repos that are part of or the topic of this conversation are when, let's say you're a hedge fund and you've got some treasury bonds, but you need some cash to finance some exotic strategy that you're undertaking. So you send your treasury bonds over to JP Morgan Chase, and they give you cash with the proviso that at some point in the very near future, you'll reverse that deal out. Hence,
in a matter of days. In a matter of days, but theoretically, a repo could go for 2 years, but generally, we're talking very, very short-term loans. But I guess, our good friend Daryl Toon said that the repo market is a pawn shop for banks.
Okay, that is kind of how it works. I'll give you this asset, you give me a little bit of money, and I'll come get that asset back with the money later. But the big banks, the big 4 banks in the U.S., and they don't specify who they are, but we kind of know that the JP Morgan Chase is the biggest, and then probably Citigroup is next, and then maybe Goldman, and maybe Bank of America or Wells Fargo or somebody. Yeah. But anyhow, they were accumulating so many treasury bonds that it started to be a problem for them. And they didn't want to keep doing this. In other words, keep giving their cash out in return for treasury bonds for whatever internal reason that became a problem. And they started demanding a higher and higher interest rate until it went from 1% annually to 10%, which would blow up all the trading strategies of all the hedge funds that need cheap, easy financing. So there's a zero hedge headline right now, but the Fed was suddenly facing multiple LTCMs. Long-term capital management was a hedge fund that got way, way, way over leveraged back in the day. I guess it was the 1990s, and it blew up, and it would have taken down most of the financial system with it because it was that highly leveraged. And the Fed and Wall Street had to step in and bail it out. This time around, there were a bunch of hedge funds that may not have been as highly leveraged and as systemically dangerous as LTCM, but in the aggregate, they were, and they would have all failed, or a lot of them would have failed, and that would have pulled down a lot of the other ones. So the Fed had to step in, and still has to step in, by the way. They're still doing it. They're still providing the liquidity that the big banks used to provide to all these guys. So there it is. The financial system left to itself would have blown up, and the Fed had to step in and bail it out. And it's still doing that.
Ongoing.
And to do that, it has to basically do QE. It has to accumulate assets on its balance sheet in return for newly created cash. And so basically we're back in QE here, mathematically, at least. The Fed's balance sheet is starting to go up again. And remember, this is at the peak of the cycle when everybody's balance sheet should be pretty healthy, and the Fed should definitely not have to do QE, because QE, to the extent that it has ever been done, and it's only been done in one cycle, was an emergency measure originally. And now we're entering a period when it's normal, when it's just a thing that happens in the financial market, even when the financial market is otherwise healthy. So that's a new stage in this process, because if the Fed can never stop doing QE, which apparently it can't now because it has to at least do repos, then what happens in the next recession? The Fed was going to have to continue to do these repos or allow hedge funds and banks to go bankrupt on a vast scale. And it's going to have to do traditional QE, which is buying longer term dated assets in return for cash to keep other hedge funds and banks from going bankrupt. And it's going to have to do it on a scale that is unprecedented, which means it's going to dwarf even the emergency QE of 2009, 2010, 2011. So the shape of the next phase of monetary experimentation is kind of coming into view now. And it's a scary one, because we're talking really big numbers, and we're talking an extremely fragile financial system that requires infusions of cash at this unprecedented scale. So, what could go wrong?
Yeah, what could go wrong? Yeah. What could go wrong? We got a crazy dysfunctional election. We've got impeachment hearings taking place that are, let's just face it, pretty damn boring, that nobody is watching and no one's interested. And what could go wrong?
FSN Radio. It's all about what's next.
Otis Gold Corp is a gold development and exploration company with quality projects in the pro-mining state of Idaho. Otis's flagship Kilgore project has a resource of 961,000 gold ounces, and its recently published preliminary economic assessment demonstrated an impressive post-tax IRR of 53% at $1,500 gold. In addition to the significant expansion potential at Kilgore, Otis is exploring its highly prospective Oakley project. This Carlin-type gold deposit already has an inferred resource, and previous near-surface drilling intersected 123 meters of 0.69 grams per ton gold. Otis Gold Corp trades in New York under the ticker OGLDF and in Toronto under the ticker OOO. That's triple O. To learn more, go to otisgold.com. That's otisgold.com.
The Financial Survival Network. It's all about what's next.
Well, bringing politics in this, it's almost like the Democrats are actively trying to get Trump reelected, because there's no real explanation for that otherwise, because this is so dumb and so dysfunctional. They had hearings for 3 or 4 days, and the ratings of those hearings went down each day because it was incomprehensible and it was boring. And they weren't really saying anything about what Trump did other than that don't look at the Bidens in all of this, And they're
look
really
over here. Look over here. Don't look over there.
Yeah. So Biden is still looking like the presumptive nominee for the Democrats, but the impeachment hearings have really hobbled him to the extent, not that this wouldn't have been a problem all along, but it's the Democrats making it a problem at this point in time. And so, it's really not clear. Like we talked about before we went live here, it's really not clear where this goes for the Democrats, because they've got, a mini civil war going on right now, where you've got bomb throwers from the left who just want to tear the system out by the roots and impose something that they would consider to be better, versus a slightly bigger part of the party, probably a really small majority of the party, who believes that we're basically, after 8 years of Obama, we were basically going in the right direction, on the right track, and we could build on that record incrementally to keep ourselves moving forward, and that's the best way to eventually end up where we want to be from the Democrats' point of view. And these guys, these two groups do not appreciate each other's point of view, and they basically are now accusing each other of bad faith. You're not just misinformed, you are morally bankrupt for thinking what you think. And that's normally what happens between the two big parties, right? The Republicans and the Democrats dehumanize each other really easily. And they each consider the other to be morally wrong, not just looking at the wrong side, wrong group of facts. So when you got this within a party, it's really dangerous for the cohesion of that party, right? Because, say Biden gets nominated, how many Bernie Sanders voters are going to hit the sidewalks and knock on doors and say, we've got to elect Joe Biden because he's going to do all this incremental stuff that'll move us fractionally closer to where we want to be. They're not going to be excited enough to do that. And then that message is not going to resonate with the base anyhow. Hey. And how many, if Bernie Sanders gets elected, 51% of the Democrat Party think that's a catastrophe, that they are now running a socialist. And a lot of these guys are old enough to remember George McGovern, who was a socialist in everything but name, who ran against Richard Nixon. And did he win any states? He won like one state.
I thought he won Minnesota, maybe.
Yeah.
Or Massachusetts, one or the other.
Yeah, so it was this massive landslide against Nixon. Who was probably not that hard to beat if they did it right back then. And so the older Democrats have visions of that same thing happening with Trump and Bernie Sanders, where the things Bernie Sanders proposes, and he won't back down in proposing them, will seem so extreme to the middle of the road voters out there. In other words, he'll get 35% of the hardcore left, or 35% of voters making up the hardcore left easily with his platform. But how many more other voters will he get? Will he get 15% of the rest of the electorate? Maybe not. And they might lose big. That's what the Democrats or that's what 51% of the Democrats are afraid of. So that's where they are now. And neither side is backing down in any way, because they can't conceive that the other side has any kind of moral or factual validity on its side. And so this is interesting to watch, but it's not clear how it plays out, because the Democrat or the Republicans are just united. Trump is going to be the guy. They don't have to spend any money during primary season. They're just raking in donations from big corporations and from everyone. A lot of small donors too. Trump is very popular with the small donor base. Trump and Bernie Sanders are the ones who are getting the small contributions from people, which is a really good sign. That's what you want when you're running for office. You don't want two billionaires financing your campaign. You want 10,000 $50 donations from real people out there who will go and tell their friends and knock on doors and stuff like that. And so it's Trump and Sanders have those kinds of organizations. Yeah. So I think that would be a fascinating campaign. Regardless of who wins. It'll
never happen. We know this will never happen. That's why Warren is in the race. Chance
Bernie Sanders gets nominated. If Elizabeth Warren drops out, her votes go to him. Then she's up there in the 30 or 40% range.
Look, I didn't want to get into my whole analysis that the entire thing is bogus and fixed. And deliberately designed to wind up with a brokered convention. But she's not dropping out. Buttigieg is not dropping out. The intent is nobody gets the requisite number of votes, and then the real candidate will emerge from behind the curtain. We'll find out who they really wanted to put in all the time, but couldn't get that person through the nominating process. I'm convinced this is going to happen. I think it's one of 3 or 4 Midwestern governors. My best guess was Tim Walz, who's the governor of Minnesota, but he just started. The governor in Michigan, a real looker, but she's just got her feet under the desk in January in Michigan. And then we have Wolf from Pennsylvania. So Wolf or Waltz, they both have good names. Nobody is going to vote for Pete Buttigieg. All right? It's just not happening. They weren't going to vote for Hickenlooper. Those are bad names. You can't win an election with a name like that, John. I mean, who was the last candidate that had a weird name? I can't think of one. I can't, because it just never happens. Ulysses S. Grant, Lincoln, these are solid names. Those people don't have a chance. Bernie Sanders, no.
But with Buttigieg, though, his healthcare plan is being called
Booty Care.
That's great. I like that.
Yeah, well, it might be
that would
good.
Almost be worth it just for that.
It might be good if you have hemorrhoids, but it's not going to work for much else.
Yeah,
that's for sure.
Yeah.
Hey,
okay, but see, Kerry, the important thing in all of this, I mean, politics is entertaining right now, but it's also really chaotic, and that chaos is the important part of the story, because that's what happens when you're going broke. You borrow way too much money and the system doesn't work anymore. And then all of a sudden, fringe candidates start getting a lot of votes because people don't trust the experts anymore. Mm-hmm. And that's where we are in today's world, not just in the U.S., but definitely in the U.S. That's how we got Trump. And that's how we have Bernie Sanders being one of the top 3 candidates in the Democrat primary. And that's how the far right or the far left in Germany is liable to be the next party in charge. And that's why France is on fire. There are riots in the streets. Nobody even knows what those guys want anymore.
Yeah. I wanted to talk about that. China, Hong Kong, and what's going on in France. They thought the Yellow Vest Rebellion was going to die down and everything would go back to normal and Macron would just keep doing his thing. Wrong. They got more people out there this time after a year than they've had in 6 or 8 months. And the same thing in Hong Kong. It was kind of simmering, wasn't going away, but it looked like, maybe they died down a little bit. And then all of a sudden, close to 1 million people show up yesterday, John. I mean, these are really consequential events. It's a rejection of the status quo. And Gerald Celente said that we're going to sell out Hong Kong to get a trade deal with China. I'm not convinced about that. I believe that Hong Kong, if it goes on another couple of months, is the beginning of the end for the Chinese Communist Party. Well, they know that. So it's not going to go on beyond the point where it starts to seriously hurt the Communist Party. And they did at Tiananmen Square. They killed a bunch of people and got away with it. That was then. They figure they can do it again. That was then. This is now. Yeah. Well, their choices are pretty stark from their point of view because they're not a legitimate government. They're a dictatorship. And once a dictatorship starts yielding to public pressure, then the floodgates just open, because if the guys in Hong Kong get what they want, then how many other cities in China have stuff that they really want that they see the chance of getting? But you know what? I think France is a more telling example, because what happened now, the point of the protest has changed in France, because originally was it a fuel tax increase? Or it's fuel tax. Yeah, okay. Did away with it as a climate change tax. That's what it was originally, and then people took the streets and everything, and now it's pension reform that is the big issue, because Macron, to his credit, is trying to scale back France's insanely generous
social programs because it's, France is going bankrupt at an accelerating rate. And it's all due to unfunded liabilities building up. So it doesn't even show up in their deficit numbers. It's just this off the books number that is an absolutely real number that's going to blow up their economy. And he's trying to scale that back in just a minuscule way. But the public sector is so powerful in France that they can shut down everything because everything runs on public sector unionized labor.
Yeah, the subways, you name it, everything. It's all about. If you've been to France before, you know that they stop, the city shuts down, and the country shuts down. They've had these nationwide strikes before, and they've been generally get their way once they do them.
Well, yeah, the government has no choice but to cave because, if Paris is shut down heading into, for instance, Christmas,
oh my God,
then that's the end for these guys. So that's what they're looking at. And of course, he will have to cave. And that's going to show the world that governments can never scale back spending. That's what the repo market showed us in the US, where we can't scale back QE because we have to continuously funnel new liquidity into the financial system or it will just implode. France is addressing a different issue. It's telling us something different, but also really the same. And that is that governments cannot stop spending huge amounts of money they don't have on their public sectors. And, in the US, you got to include the military in that. But in France, it's less so. It's more straight up public sector, trains and welfare and et cetera, and housing. And you just can't, beyond a certain point, stop spending that money because you've created constituencies that are so powerful that they can bring down the government and replace it with a government that will continue to spend the money. And that's what happens everywhere and always once you go beyond a certain point in size of government. And we're there in the world right now. So it just remains for different countries to try to scale back and fail for everybody to realize, oh my God, $1 trillion deficits for as far as the eye can see, easy money forever. Interest rates can never go up. Government spending can never go down. And then to conclude that means there's issues with the currency, right? If that's the situation, then why would you ever want to own the currency of a system like that? And then we get to the end game. That's the dollarcollapse.com thesis that has, that should have happened a long time ago and hasn't yet, but is going to. And we're seeing all these indications that things are happening to illustrate the process. And we just have to pick up on it and see, oh, that's what that means. And, when a sufficient number of people do, then it's game over for the fiat currency, fractional reserve banking, unlimited government spending system.
Yeah, unlimited government system. And that will get here eventually. The question is when. I don't know the answer to that, but keep reading John's work over at dollarcollapse.com. Check out our site, financialsurvivalnetwork.com. Hey, my last YouTube, I talk about non-compos mentis creepy Joe. And, you really want to check that one out. We've been getting so many more subscribers and comments on YouTube. Wherever you're listening to this, post a comment, whether it's on Financial Survival Network, on the podcast site, wherever it might be, just post the comments. We answer them all on YouTube, so feel free to do it there. But I think it'll get to a point where I'm not going to be able to do it anymore. But hey, I'll do some. I'll do the key ones, and I'll thumbs up all the others. In any event, John, we will catch up with you next week. I have a feeling the insanity is only going to increase by then.
As always. Okay.
All right.
Talk to you next week, Kerry.
Oh, and email us, kl@kerrylutz.com. Be remiss if I didn't remind you about that. John, have a good week. We'll talk to you then.
You too. Talk to you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.